Ever wondered how the money in your bank account could multiply without you lifting a finger? Welcome to the world of investing. It's a fascinating realm where your money works for you rather than you working for your money. But wait, before you conjure images of Wall Street, stock exchanges and high-risk gambles, let's debunk a few myths. Many perceive investing as a complex beast difficult to tame, but in reality, it's a skill that everyone can learn. Yes, you heard it right, everyone. It's not exclusive to financial whizzes or Wall Street wolves. Another common misconception is that investing is synonymous with risk. However, with the right knowledge and strategy, you can greatly minimize this risk. Think of it as a game of chess where strategic moves can lead to victory. By the end of this video, you'll have a clear roadmap to start your investing journey. Rule number 1, understand what you're investing in. Now, this might seem obvious, but you'd be surprised how often it's overlooked. Take Warren Buffett, for instance. His success isn't just down to luck, it's rooted in rigorous research and a solid understanding of his investments. You see, investing without understanding is like sailing without a compass. You might catch a favorable wind, but you're just as likely to end up lost at sea. Remember, knowledge is power, especially in the world of investing. Don't put all your eggs in one basket. It's a proverb we've all heard, and it's never more apt than in the world of investing. Diversification is about spreading your investments across different asset classes, stocks, bonds, real estate, and more. This approach helps mitigate risk. If one asset performs poorly, others might perform well, balancing your portfolio. It's like a safety net for your hard-earned money, potentially increasing returns over time. Remember, diversification isn't just a strategy, it's an investor's best friend. Ever heard of the term compounding? It's the secret sauce of investing. Picture this, you're baking a cake. You start with one layer, then add another and another. Each layer builds on the one before it, making the cake taller and more impressive. That's compounding in a nutshell. Now let's translate this to investing. Imagine you invest $100 and earn a 10% return. That's $10, right? But here's where the magic happens. Next year, you're not just earning interest on your initial $100, but also on the $10 you earned. That's the power of compounding. It's interest on interest, growth upon growth. Over time, this process can turn even the smallest investments into substantial sums. It's like a snowball rolling downhill, gathering more snow and growing larger with each rotation. So remember, compounding is the magic that turns small investments into big returns. Patience isn't just a virtue, it's a necessity in investing. Now let's delve into why this is true. Picture this. You've just started investing. Your portfolio is diverse and you understand the power of compounding, but the market takes a dip and you panic, selling all your stocks. That's where many beginner investors falter. Successful investing is a marathon, not a sprint. Consider the stories of legendary investors like Warren Buffett and Charlie Munger. They didn't amass their fortunes overnight. It took years of patient investing, sticking to their strategies. Even when the market was in a downturn, they understood that the market is cyclical, and what goes down must come up. So, when you're tempted to sell at the first sign of trouble, remember this. Rome wasn't built in a day, and neither is a strong investment portfolio. So be patient, remain steadfast, and let your investments grow over time. Patience is the key that unlocks the door to successful investing.